Welcome to my channel today. This is King Tutor. It's the first time of joining us. Ensure you like, comment, share, subscribe to this my channel. Okay. Now, I want to see this question that relates to past wire question. Okay. The question is said like this. Now we're going to be seeing questions like this often. Okay. So the question relates to how to treat bad debt and provision for bad and doubtful debt. He said, use the following information to answer the questions. So we have provision for bad and doubtful debt, 1,000. Bad debt is 500. Debtors is 50,000. And he said, additional bad debts to be written off is 500. There's a new provision for doubtful debt to stand at 5% of what? Debtors. That's a new provision. And they say, 1, the net figure for debtors in the balance sheet is dash. They give us these 4 options. They want to know the net figure for the debtors in the balance sheet. Now, to prepare this, you have to be conversant with adjustment, okay, of final account. We have done that. I'll leave it in the description, or I'll leave it up here so that you watch that adjustment. I did that part 1 and part 2 where I treated this. It's very critical, okay? If you don't have knowledge on this, you are going to make mistakes. So let's see how to prepare this and all that. Now, they said the first one, they want to know the debtors figure in the balance sheet. Now, before we have to know the debtors figure in the balance sheet, we have to apply what was said there. Now, if you watch this, this is just as if it is in the trial balance. They stated where it will be credit, debit. But this one, know where it will be. It means this is the additional information. Now, they said additional bad debt to be written off, 500. New provision for doubtful debt is to stand at 5% of debtor. So at this situation, what do you do to get the debtor's value? Now, the debtor's value now will now be, watch. Now, whenever you have a bad debt as additional information, you must deduct it from the debtor's value before you compute any provision for bad debt. Very important. Whenever you have a bad debt as additional information, you must deduct it from the debtor's value before you compute provision, because this provision is to be for a debt that is already bad, not the one that for a good debt. This provision is for good debt and not the one that is already bad. Like this one is already bad. Okay, so the debtor's value, now they say debtors, is 50,000. So we have 50,000 minus the additional bad debt. We have to deduct it is in additional information. So this will give us 49,500. Okay, so they said the new provision is 5%. So we can now calculate 5% on this. So 5%, so this will be 5 over 100 times, this will give us times 49,500. This will give us 2475 as new provision. As new provision for bad debt. New provision for what? For bad debt. And remember, we already have an old provision here, 1,000. So this new provision as 2475. Now remember, they said the net figure for debtors in the balance sheet. So in the balance sheet now, look at how debtors figure will appear. It will be debtors 50,000 less bad debt. Less bad debt, that is this 500, because this one cannot appear. This can only appear in the profit or loss account. It cannot appear in the balance sheet again. So 50,000 minus 500 will give us 49,500. Now less provision for bad debt. And the provision now will be the one that was actually calculated as 2475. So 49,500 minus 2475, it will give us 47,025. So do we have 47,025 here? Yes, 47,025 is the first one. Okay, so that's the first question. So the person got that when it is marked. Now the next one, actually this one is surprising that WAEC could make a mistake like this. WAEC, they make mistake on this, on the option. Okay, and they say the provision for doubtful debts to be charged to the profit or loss account is dash. The provision of doubtful debt to be charged to the profit or loss account is dash. What is the provision that will be charged to the profit or loss account? Now, the provision that goes to profit or loss account is the difference between the new one that was calculated and the old. You don't post the new one that was calculated. The new one that was calculated is posted to the balance sheet. Okay, so it is the difference that will be posted to the profit or loss account, either an increase or decrease. Now watch. If you watch here, we have old provision for bad debt. Look at it here. Provision for bad debt 1,000. It's already there. Now the new one, new provision is 2,475. So we get the difference, and this minus this will give us 1,475. It means this is an increase. The old was 1,000, the new is now 2,475. That means it increased by this value. So it means an increase, and this is what goes to profit or loss account, not this one. This one goes to balance sheet. This goes to profit and loss account, the difference 1,475. But I was surprised 1,475 is not here as the option for WAEC. That was very serious. Very, very serious. 1,475 is not here. I wonder how they vetted this question and they revisited it. But I'm sure this is supposed to be 1,475. And this is an objective question. So what would the person do in this situation? Okay, so the answer is 1,475 that will be posted, because I said the provision for doubtful debt to be charged to profit or loss is 1,475. Thank you very much, and let's see another question in the next video. Ensure you like, comment, share, and subscribe this video. Thank you.